Hi everybody, Eddie here. Just going to make a quick video for next week. So it's been an interesting week. We've been very bullish this week after this break of the high of the peak of last week. And then it just kind of took off, hit the 50-day moving average, consolidate back into the 8, and then we got an explosive move on Friday to engulf all of that. So next week, I am actually looking to see if we can break this 3,900. It was struggling at this 3,900 at the close. So if we break through, we're looking at about 4,000 and then up to 42 and possibly break out of 42, 41, 42, and then we can actually continue higher into the end of the year. But you want to trade with caution because the FANG names have really bad earnings this week and the market actually went up. So the market actually been moving up by retail investors mostly because institutional investors actually been selling into these strength. So if we get a short squeeze type of play, potentially we are going to push this up next week into probably around this gap fill area right here and into this high. Possibly, so around 4,100 is the target. This is the neckline, which is very important for this inverse head and shoulder type of pattern here. We actually broke through the neckline right here. This is this high resistance area from all the way back into this. So if you've seen this, this was a strong support before, and then it was a strong resistance before the break, and then it also tested a support once again on the way back down. So now we're back on the way up. This is resistance once again. So this is a very important area. So once we break through this area, then potentially we'll rush up into the 200-day moving average, which is around 4,100. And if we can break through it, we could actually go and test this high right over here at around 43, right? And if that's the case, then the momentum would shift and we could actually see a nice rally up. But in a bear market, seasonality wise, usually we get pushed up in the first week of November and then we come right back down. So next week there's actually a Fed meeting on Wednesday for interest rates. So that could be the catalyst to either shoot us up or break us down. All right. So next week, be very careful. Look at that. Until then, I want to look for some momentum on Monday if we can break through this. If we don't break through this on Monday, right, most likely we're going to consolidate into the Fed meeting. So, just pay attention to that and keep that in mind. So if we can break through 3,900, you can expect we hit 4,000, right? So if we do break 3,900 on Monday, you can ride it up towards 4,000 before the next level of heavy resistance comes through. If you look at the volume shelf, 4,000 is that resistance, and then there's a little gap between here and 4,100, right? So if it breaks 4,000, then we're going to hit 4,100. Right, so those are your next two targets that are very important. In that 4,100 is where the 200-day moving average is, also where this peak is right here, which is heavy resistance. Sometimes we overshoot it, fake you out, so it could hit 4,200 before the actual reversal down for a lower high, right? So that's what I'm looking for, is another lower high and then continue lower. Right, but things can change with the Fed meeting. So if the Fed is going to pivot, then we're going to blow out of this thing, and then we can call this a temporary bottom, and then perhaps get a big giant rally into the end of the year to make a new high. Right, that would be insane, but it can happen. Right, so we'll see what happens next week. It's going to be a very important decision making next week after the Fed meeting. So if these levels get taken out up here, then we're going to go much higher. Right, if we get rejected, then expect it to come back down, retest these lows right here. The very important level is actually 3,800. So we tested that multiple times this week, and it held. So that's why we got this big explosion move. Once it held, we actually engulfed everything, and then now we're looking very bullish, right? So if on his way back down, it's most likely going to break this first, and then you're going to hit this level right here. which is at 37.27 area, 37.27, 37.30. So around that area is very important. Once we break through that area, it's a very bearish scenario. As long as we stay above this area, it's still a bullish scenario. So, just keep that in mind for next week, and then we'll see what happens. Trading price action. Don't try to go in with a bias. I try to trade it day by day now until things change, right? And things are not changing. And I want to start seeing the price action to either go above the 200 and hold, or we actually just going to get rejected at key area and then break down, so we can trade much lower, right? So either direction, it doesn't really matter. You can make money each way. It's what you do with the price action that's important. Right, let's take a look at the Qs. Qs is a little bit weaker, as you can see, mainly because all the big tech names miss earnings, except for Apple. Apple slightly beat, but on Friday it was more retail selling, buying than anything. Institutional traders actually sold into the strength, so it's not really good sign. We most likely just going to get like a little rally with the S&P, and then once the Fed meeting happens, don't know when, we're going to get some type of rejection, and tech will be the most likely the area is going to fall the sharpest. So if you're trading the short side, tech is a better short than the S&P 500. If you're playing the long side, you can trade the S&P instead. Right. So this is the trend line right here, all the way up from the top. So if we do get like this break above the 50, we most likely just hit this trend line and then get a rejection afterwards. Right. Something interesting is that the VIX continue to drop as we hit into these areas right here, which is very odd, leading into bad tech earnings, right? Because I was expecting on Friday we get a flush down because how much Amazon fell, but it didn't happen. Apple kept it up, and I actually day traded, and if you follow the algo on Friday, you would make a lot of money on my algo. But I was trying to counter trend it because of Amazon, and it didn't work out too well. I managed to stay positive, but it could have been a really good green day, but I was just slightly green. So, anyways, on the VIX, pay very close attention at 25, right? 25 to 23. This is the bounce area. So once we hit 25, 23, expect a base and then a big sharp shootout if we were going to get our next leg down. So down at these levels, right down here, you could possibly buy a long-term VIX call out of the money around that 34, 35, and potentially get hit and can print some money if we are going to get our next leg down, right? So it's a potential play there. You just want to pay very close attention. As you can see, I set my alerts at these areas already. So I am looking for the VIX to hold around these areas and then bounce off these areas. Right. So let's take a look at some stock. So Apple, like I said, on Friday we had a huge day. It gapped up and it just kept going and going and going. It hit the 200 before it got the rejection. So this level right here is very important. It needs to break above this level, and then we're going to test the highs right here, right, 175. On its way there, there's some a little bit of resistance along the way, which is these little peaks over here. This 175, 165 is a very important level. So once it breaks through that, most likely we want to try to test these between 171, 176 area. All right. So Apple is a temporary play right now. But we'll see what happens on Monday, because on Monday we would give that all back because we're at resistance point. So if the SPX can't break 3,900, most likely Apple can't break either. So he's going to come right back down. So just pay attention to that for next week. AMD. So AMD is trying to create a little base here. If there's some sort of bounce in the index, you can likely see this bounce as well. Your target would only be $70, 70, 75. That's your resistance point. So at 70, 75, you're stuck in this trade. That's your exit. to take the trade if it gets rejected around these levels here, right? I mean, if it continues up, you can always hit 90, but most likely it's going to get rejected around this 70, 75 area, right? And before you get the next leg down. So at this area right here, if you hold it, you can hedge it. If you want to get rid of it, this will be your potential sell point. Just pay close attention to see at this area we're going to get rejected or get a breakout, right? If we break through it, then expect we go back to these areas right here, about 80, between 80 and 95. Amazon got big gap down. We traded this for earnings play, made some good money on it. Wish he stayed down pre-market because he went down as low as like 89. Which would have been a huge play if it stayed down, but we actually pushed back up towards the open, and then we continue to go up with the market. So this is a big gap right here. There might be a gap fill play and then come down lower. We see what happens on Monday. This is a major support area. So if the market actually holds, then we can likely just fill this and then base around for a while and get some direction. But it looks like it wants to come down to about 80 to 85, which potentially is a fairly good buy for longer term, but it could come all the way down to around $60. So it's something you want to keep a close eye at. But I would be buying at 80 just to get my small position in, and then possibly add on the way to around 60, right? Which would be a steal at 60. So I still believe that longer term, this is a really good company to hold. Just temporary, their sales are down with the economy, so that's expected. But these names are priced for perfection. So if they miss on earnings, they are coming down hard, right? So this is just one of them. Meta got destroyed. This is why I don't want to invest in this, because I knew that they would not hit any type of numbers for the next few years, because that metaverse, if it does work out, is going to take at least 6 years. So 6 years of non-revenue growth, no thanks. Google made a new low. We are approaching some major support areas, which is at 88, 85, 88 zone, and then this 72, 68 zone, which is a huge buy zone. If it comes down here, this is where I'm going to start loading up. This is where I might start buying. I'm not sure yet. We'll see what happens with the price action. But likely this is a good buy zone right here around that 68. Worst case scenario, we go back to covert lows, which will be backing up the truck, but I'll be start buying over here. Microsoft, so Microsoft held a little bit better than the others. They bounced off the support right here. It did not make a new low, which is a very good sign. So this was one of the buy zones right here, and the next buy zone is all the way down here. So if this does not hold at 220, then we're coming down to around this 160 to 190 zone. It's a pretty wide zone, but that's where a lot of the support is on the way down. But hopefully you'll hold this area right here. I don't mind dipping my toes in like somewhere along right here, but we'll see what happens next week, because it's just going to follow the index. So if the index is not going to work out, this is not going to work out. So if we are going to break through 900, then likely Microsoft will have a play from here to 250. At 250, it's a potential rejection area, because this is a pretty heavy resistance, because it was a heavy support. Now it's heavy resistance. So this 250 zone is really important, and then the next level is 270, right? So keep an eye on those levels. If it is going to go up, those are the areas you want to take some profits, and then see if we'll get reversed back down. Netflix, I keep forgetting to play this for the gap fill play. So likely if market's going up, it's going to gap fill by next week. We still got about 10% to go, which is good. Most likely get rejected at the gap fill though. So if it gets gap filled, it's likely to come back down unless the market will get a short squeeze. Then Netflix will actually shoot back up and then potentially test this 400 to 450 zone, which is very possible. Nvidia, so Nvidia got a nice little bounce off the demand zone right here at this low. So it did bounce, but I am not touching any chip stocks because they are going to struggle with sales for a little while if they can't ship to China. So that's a big catalyst for chips. So it will have like a dead cat bounce, and most likely it's going to get rejected and go back down lower. So I'm not touching any of the chip names for the moment, unless it goes down to the very low area, which is around this 70 to 50 zone. If it goes down here, then I'll buy some. Chips usually has an 18-month cycle. If it's good, but it can last up to 2 or 3 years, right? For a bear market for chips, because chips go in big in cycles. It's more as a cyclical stock. So when the economy is booming, they do really well. When the economy is not booming, they do really bad. So keep that in mind when you're trading these chip stocks. Tesla. So Tesla is holding this key zone right here at 200. This is creating a very nice base here. If things are good, expect it to come back up to here, fill that gap to around that 265, 260, 265, 270 area. This is a good area to get rid of your shares if you own it. Unless we're going to get that big, huge short squeeze, but it doesn't look like it at the moment. But it does look like there's a trade to bounce up to these areas right here before the next leg down. And for Tesla, it's a big head and shoulders pattern. You don't see it, right? It's let's see, shoulder, head, shoulder, neckline. Well, actually neckline right here where my alert is. So this is more of a zone. Excuse my bad drawing. So yeah, so if it breaks this 180, it's going to come down. It's going to come down hard. To measure how far it goes down, what you do is take the peak to the neckline, and then pull it down. Oops. All right, so that's too far. But yeah, it could come down to these areas down here at 140. First off is 140. This is a very key area, right? And then this is your main area down here at 60, between 80 and like 40. But I think it'll hold right here. Most likely it's just going to find some value right here, and people will be buying over here. But yeah, you want to watch this very carefully as we are at this neckline, right? This is a very key area to hold. It needs to hold this. If it loses this, then you better hedge or get rid of your shares, right? Because it could get ugly, right? So doesn't mean it will, but it could. So you want to be very careful holding below 200. Anyway, that's pretty much it for some of the stocks that we look at right now. I'm only concentrating on the FANGs most likely. There is some smaller names that are actually moving. Bitcoin's actually moving, which is interesting. Bitcoin it held at the 1900, so it's basing right here. So if Bitcoin breaks above 2500, then you're going to get a huge short squeeze. So if that happens, you're expecting to hit 30 and then possibly 40, which would be a nice double. So, but it's still basing right here. Nothing's going to happen yet till he breaks above this 2500. So there's room to trade in this area. Just keep your stop below like right here, like 1800. I mean 18,000. Sorry, 18,000 is where your probably should set alert right here. Set an alert at 18,000 and keep that as your stop loss. But there could be a play. It will be good risk reward. You're risking 2,000 points to possibly make a whole lot more. So, and I just want to take a look at the algo. So this is my algo. It's been working super well. I even got new traders that not great with technical analysis, but are making a killing using this algo. If you buy on Friday, we got to buy right at the open, and it stay a buy till all the way up here, right? That's I think it was an $80 or $90 profit target before you got the sell signal. Yeah, 75, sorry. So that would have been a huge play for the day, and that would be your only play for the day, and you could have made a ton of money. What I normally do is I use the 5-minute as my guideline, and then I actually scalp using the 1 or 2 minute, right? So this is the 2-minute chart. So at the open, you got a buy signal right here. It went to sell right around here when it broke the moving averages and the low. So that's a 25-point play right at the open, right? And then you got this little short sell right here down to a support, found support right there, and then it bounced. Because the 5-minute algo is still in an uptrend, you'll be trading the buy right here, triggers the buy, and then you could have traded this all the way up to this sell zone right here once that consolidation broke, which is another 36 point. And then towards the end of the day, you got these little peaks right here that that you most likely want to avoid, because the algo works great for trends, and the trends usually happen the first 2 hours, and then after that, it's in the afternoon, it's kind of slow grind. So I do have little rules that comes with this algo and how to trade it, and trading the first 2 hours is one of the rules. So if you want to make high probability trades, stick to the first 2 hours, and after the first 2 hours, you kind of want to take it easy, or you can trade shares, which don't have decay, so you can actually use physical stop loss and just ride the trend up if it was going to go higher, right? So that's one way to trade it. We added some new features onto this, so we do have these automatic support and resistance areas. We also have multi-time frame algo buy sell signals up here, which gives you a little bit more of an edge, especially to new traders that don't know how to spot these support and resistance areas. As well, we're using confluences and multi-time frames to pick our direction. So this gives you a lot higher probability of making money if you use this algo. So far, everybody's doing great with this algo, and a lot of people they worry about the cost. I mean, yeah, it comes free with 1 year Discord, which you'll learn a lot of things in Discord itself. Plus, you most likely make that money back if you catch one of these days with just one SPX contract. So just one SPX contract on this day would have paid for about 3 years of your algo cost, right? So, don't worry about costs. I'd be worrying more about missing opportunity, because these volatile days is not here forever. So take advantage of them while you can. And with this algo help, you can make quite a bit of money in that time. So anyways, I'll see you guys later, and hopefully I'll see you guys in Discord. Make sure to like, subscribe, and check out my website and my free Facebook group as well. Links are in description below.